if you go back and you look at MicroStrategy's historical earnings, a lot of their historical earnings have been negative since they've adopted a Bitcoin treasury strategy. And the reason for that is because of the dated accounting rules that effectively you have to mark Bitcoin as a long-lived intangible asset. And so what that resulted in is MicroStrategy had to mark down the value of their Bitcoin to the lowest price during each reporting period. So effectively, MicroStrategy is carrying a significant loss on their balance sheet, technically, from an accounting perspective, while they've got a material gain from their underlying Bitcoin holdings. If the price of Bitcoin goes up $1,000, MicroStrategy would have a $470 million gain in Q1 if the price of Bitcoin goes up $1,000. MicroStrategy potentially being a Bitcoin bank. I think that's eventually inevitable because we're in this kind of like Bitcoin gold rush, right? So from now, but between now and 2032 is really the Bitcoin gold rush. At 2032, there'll be 1% of Bitcoin that is, remains to be mined over the next 100 years. So basically, there's effectively very little Bitcoin that's hitting the market at that point in the future. So, I think the strategy from now until 2032 is to accumulate and acquire as much Bitcoin as humanly possible.
Hello, everybody, and welcome to My Two Sats. My name is CJK. I am back with the one and only Jeff Walton, aka Punter Jeff. Jeff, thank you so much for joining me again.
Absolutely. Happy to be here. Having a lot of fun. I'm going on the podcast tour at the moment. So yeah, hit them all.
Beautiful. Well deserved. Well, for those of you who don't already, I don't know, maybe you're living under a rock or something, go ahead and follow Jeff, join the communities, do what you need to do to hear what this man is saying, because he is on the cutting edge of the stuff that is going on, not only with Bitcoin, but in MicroStrategy and insurance and just the natural evolution of Bitcoin, going from that magic internet money to digital gold to reserve asset of the internet economy. And now through the adoption and monetization process, the most pristine form of collateral in the world, which we are going to definitely get into. But I want to start off talking about something that you shared, which I think it goes unappreciated, really. But the way you simplified it down really just makes it so much more important for people to understand. And I want to kick off this way. And that is that you were talking about, of course, huge liquidation event taking place over the last 24 to 48 hours. A lot of people who haven't been in the industry for a while, probably a little bit scared out there. And I just thought this was a beautiful message to minus the ramen. I'm not a fan of ramen, but strategy unchanged, invert the colors of the apps if need be, spend energy to acquire as much Bitcoin and MicroStrategy as humanly possible. And the one thing that I thought was really interesting here was inverting the colors on your app, because people don't understand how much of a mental game this is. And for those of you who don't know, Jeff has recently left his job at reinsurance. He has now been promoted. He is now a personal asset manager. And he's going to find out that job is a lot harder than it sounds. But the mindset to be successful at what you have done, not only as a reinsurance broker, but also at the same time as a personal asset manager, now putting that full focus there. Inverting the colors on your apps. There's a deeper thing here, isn't there? Like seeing the green on the downside and the red on the upside. Can you explain to everybody like your mindset and how you deal with the volatility and what you tell yourself to kind of get through and keep saving and keep accumulating and what that feels like and that process looks like for you?
Yeah, absolutely. That's a great question, and it's a great call out. So, personal asset manager, or really, I think of myself at the moment as a balance sheet asset manager, right? So, in my last job, or my last role as a reinsurance broker, I was helping insurance companies manage their balance sheets, manage volatility on their balance sheets, and thinking about volatility of balance sheets themselves. So, personally, for me, when I'm thinking about the volatility of my balance sheet, I'm managing my leverage ratios similar to how MicroStrategy is managing their leverage ratios to make sure that I can facilitate living my life the way I want to while staying within the constraints, and being able to push myself forward and focus my time and energy where I want to. So there is a huge mental component here, um, in managing the volatility, both up and down. There's euphoria on the upside, and then there's um, fear on the downside. And ultimately, um, for me, understanding and managing my own thesis for the long term has been really helpful and really valuable. I mean, luckily, I'm up significantly from my cost basis because I've been in this trade in Bitcoin and MicroStrategy for 2, 3, 4 years. So I've I've done decently well. However, now I get to focus my time and energy towards building on Bitcoin and potentially building on MicroStrategy and the capabilities for the future. So, um, you know, research has helped a lot. Understanding the power and capabilities of Bitcoin, watching a ton of videos, reaching out and speaking with people in the industry, going to Bitcoin meetups, going to Bitcoin conferences, and seeing the technology in action, and talking about how these different companies and people are using Bitcoin in different ways to kind of finance their lives and finance their future. So all of that stuff together has really helped me manage the emotional toll of the volatility, um, just in general. Also, Sailor helps. Sailor helps. He keeps it comfortable. Like, do not sell your Bitcoin. I think that's what he tweeted yesterday. It's like, oh yeah, it
Yeah.
helps.
I have that up. We're going to get into that.
Yeah,
But before we do, I just want to reiterate for everybody. Notice what Jeff leaned back on. The two things were the two main things: thesis. So this is one of the important reasons that you follow people like Jeff. If you don't have the time and energy because you have a family, you have friends, you have obligations, you have your job, and you can't really formulate your own thesis, then you can put your mind and trust behind someone like Jeff, who's put in the proof of work and put in the time and energy to produce this valuable content that he puts out for free. And you can understand the thesis deeper and deeper when you spend more time. I find that people who jump around from one person to another actually get less from the relationship than people who actually focus on people. Like, you're someone who I keep my notifications on, and I want to see those ideas every time they come out. But there's very few people on all of X that I keep notifications on, because the more you have, the less diluted your understanding of what's really happening becomes. So for those of you who haven't been in as long as we have, and who might be dealing with some stress and doubt, just focus on building your thesis. And then the second thing I thought was really important and valuable to anybody who's going to be managing their own personal balance sheet is to be thinking about the future. So it's a mindset that's geared towards the future. You said you're
yeah,
excited about what you're going to build on Bitcoin, what
yeah,
you're going to build potentially with MicroStrategy, or even maybe People's Reserve. Who knows? So what you're able to do in the future is so important, because if you make a mistake in the past, when your mind is focused on the past, you're not going to be able to fix it. But what you can do is what you fix next, which is a future based mindset. So I challenge you out there, when you talk to your family, when you talk to your friends, see if they're talking about the past or they're talking about the future, and start to align yourself with people who are more talking about the future than the past. And you'll find that that helps you build your thesis even more. But thank you so much, Jeff, for sharing that insight to how you get through the ups and downs of everything going on right now. And I want to hop into the meat and potatoes now and move right into MicroStrategy, climbing the list of one of the most valuable companies in the world, nowhere near where it's going to end up. But we had the preferred offering. Can you break it down for us? What's going on with it? What did it look like? What are the results? And what can we expect in the coming weeks?
yeah. I'll a little bit. So, 200 MicroStrategy's preferred stock offering was priced and listed, and I think it goes live on Wednesday, February 3rd, maybe Thursday, February 5th, or Thursday, February 6th. Initially, when so MicroStrategy's issuance of preferred stock is under a new ticker. It's called Strike, STRK. STRK is going through an IPO. It's gone through an IPO process. So this is an initial public offering where MicroStrategy goes out to the market. So they go to the capital market that's interested in preferred stock, and they ask the capital market that's interested in preferred stock. They put out a structure. They said, okay, we're going to offer this preferred stock at $100, and we're going to offer an $8 dividend, which is an 8% yield on this preferred stock. And they put out this structure to the market. So, and they asked the market, based on this structure, how much capital can you provide? And if you can't provide capital at this structure, what does the structure need to be in order for you to participate on this preferred share IPO? So, how I anticipate this has happened behind the scenes is, they went out to the market aiming to generate $250 million of capital at the initial public offering structure, which was a price of $100 and a yield of $8, a yield percentage of 8. That yield of $8 is fixed. So as the price of strike goes up, the technical yield percentage goes down. As the price of strike goes down, the technical yield percentage goes up. So they went out to market, tried to generate 250 million of revenue. The market came back with $584 million of capital, but at a slightly reduced price. So they said, okay, instead of a price of 100 and yield dollars of 8, how about a price of 80 and yield dollars of 8, which worked itself out to a 10% yield. But that yield dollar figure is capped again. So if the price goes up to 100, that yield is still $8 per share. So this, I think this is the largest preferred stock upsizing in market history, on a percentage basis. So this is a significant indication of material demand in the market. A lot of people saw this as that there wasn't capital for convertible bonds or convertible debt, which is totally not the case. This is a very different product and a very different marketplace from the convertible debt market. So preferred shares is, with MicroStrategy offering an IPO on preferred stock, this is a totally, completely new pool of capital that MicroStrategy is able to tap with different structured products to get Bitcoin exposure. So, yeah, I think that's a quick summary of it. It's significantly more nuanced than what I explained, right? Like there are effectively Strike. The goal of Strike is to provide correlated Bitcoin exposure with less upside and less downside. So the idea being that you get paid this perpetual $8 per share dividend in perpetuity, with some ability to convert into MicroStrategy common stock. So there's that component. And when you think about the structure, like where preferred stock sits in the structure of, of capital, if there were an event where MicroStrategy were to go bankrupt, you think about who's in line first to get the assets. You've got convertible debt as senior, so the senior debt would get assets first. If there's any debt left after the senior debt's gotten assets back, then the preferred stock gets assets, and then the common stock is last. Basically, common stockholders get, the excess of whatever's left at the very end. So that's why there's more risk in common stock, more volatility in common stock, because you are taking more risk technically than the other products that are in the market, the convertible debt and the preferred stock.
Thank you so much for breaking that down, because yeah, there's been so much confusion in the marketplace. They just don't understand. And it shows you that this stuff is becoming more and more sophisticated. And this highlights the thing where there's a future for MicroStrategy and People's Reserve and others, because not every problem in the marketplace is the same. So there's a lot of nuance to different pools of capital, the problem that they face and how they want to allocate. And Michael and team are creating the products necessary to tap those different pools. And it was oversubscribed. They went for 250 and they got more than double that. So that's called good news. That's not bad news. That's called demand, right? So you're borrowing at zero in convertibles. You're raising over 100% what you targeted in a different capital pool. The demand for these products is insane. And it really, I think it gears down to real interest rates being negative. That's like the problem that everybody faces right now. Yeah, I can lend my money to the government, but when I get paid back, Like, I don't know what I'm going to be able to buy, but I'm pretty damn sure I'm going to be able to buy less goods and services because I don't believe headline CPI. And when I look at my business and my balance sheet, I'm seeing my costs go up much more than 2.9%. We're talking 3, maybe 4 times, depending what business you have of that. So where can I park my excess revenues, my savings, in order to generate a yield? And that 10% mark, I think that gives a lot of insight to what some of these people are saying. Yeah, I want the exposure, but really I want the 10% because the
Yeah.
10%, according to me, is going to give me a real rate of return. And anything on top of that is just extra cheddar. But if I can get that 10 and keep that exposure, I'm solving my problem, which is I need savings that's going to produce a yield higher than my price increases so that I can buy more goods and services. I can expand my business more aggressively. And there's just a lack of solutions in the marketplace right now because nobody wants to admit that real rates being negative is actually the problem.
Yeah. And that's a really interesting point because you think about who buys the preferred stock, right? And I think a lot of capital in preferred equities sits in preferred equity ETFs. So again, going back to my background with insurance and thinking about pension funds and banks, these are the companies that are buying the preferred stock because they're thinking about that interest rate component. So it may make up, preferred equity may make up a larger portion of an insurance company's equity portfolio because of the reduced risk nature and the yielding nature, because they're able to match those assets to duration liabilities in conjunction with the rest of their portfolios. So, yeah, it's very very appealing to select pools of capital.
Absolutely. I mean, this is the biggest problem in the world right now. I mean, it's a multi-hundred trillion dollar problem.
Yeah,
It's just that multi-hundred trillion isn't coming from one pool. It's coming from many pools that are coming together and are either mandated or forced to invest in one way or another, or even they can't invest and they have to lend. So there's these different solutions that are going to come up. And of course, Bitcoin is at the core of it. But before we move into Bitcoin, and what's going on there. There's one last thing I want to touch on, which I think everybody's going to be just kind of flabbergasted at the reality here. But that is the upcoming earnings for MSTR. So, what do you see
yep.
happening, and what do the numbers look like? And what can we expect?
Yeah, so there is an earnings call for MicroStrategy coming up this Wednesday. So it's Wednesday, February 5th. There is some speculation that MicroStrategy may adopt FASB fair value accounting, and that would be a big piece of news for MicroStrategy. I think there's a possibility that gets adopted in Q1 2025. In fact, I think there's a higher likelihood of that because that's what they've previously mentioned in past earnings calls last October 30th. But I think what you're hitting on is the impact of FASB fair value accounting for MicroStrategy. So MicroStrategy currently holds 471,000 Bitcoin on their balance sheet, and uh, based on accounting rules, if you go back and you look at MicroStrategy's historical earnings, a lot of their historical earnings have been negative since they've adopted a Bitcoin treasury strategy, and the reason for that is because of the dated accounting rules that effectively you have to mark Bitcoin as a long-lived intangible asset. So you have to mark it on your balance sheet as if it were a patent, basically. And so what that resulted in is MicroStrategy had to mark down the value of their Bitcoin uh, to the lowest uh, to the lowest price during each reporting period. So um, effectively, MicroStrategy is carrying significant loss on their balance sheet, technically from an accounting perspective, while they've got a material gain from their underlying Bitcoin holdings. So why is this important? Once MicroStrategy is available to, or once MicroStrategy adopts FASB fair value accounting, they will be able to mark their Bitcoin to market value at the end of the reporting period. So, for example, Mike, at the beginning of January 1st, 2025 to the end of Q1, so March 31st, 2025, if the price of Bitcoin goes up $1,000, MicroStrategy would have a $470 million gain in Q1 if the price of Bitcoin goes up $1,000. So you can start to do some simple math here. I think Bitcoin started Q1 at $93,000. as of today, uh, Bitcoin's trading at $100,000. So you're talking, you know, a potential $1 billion gain hitting net income on their balance sheet at the end of Q1. Now, again, why is this important? This is important because this would effectively flip their earnings, their technical accounting earnings, historically from negative to positive. And if you think about the architecture and the design of the equity market, one of the largest index funds in the world is the S&P 500. S&P 500 represents 3 of the 5 largest index ETFs in the planet: number 1, number 2, and number 3. So in order to qualify for the S&P 500, you need to be one of the top 500 US companies. You need to have, there are a few criteria. You need to be above $14 billion in market cap, and you need to have positive earnings over the last 4 quarters or the last 4 quarters summed together. So if you look back at history, MicroStrategy has never qualified because of the earnings, right? They have had negative earnings over the past 4 years, basically. And once they adopt FASB fair value accounting, they will then qualify. Um, but assuming Bitcoin is positive, they will then qualify for being added to the S&P 500, which will be incredibly controversial because there's a committee that selects which equities are included in the S&P 500. So you'll be looking at a company that potentially has a $100 billion market cap and positive earnings, and technically qualifies for the S&P 500. And there will be a lot of dialogue and conversation around how this impacts MicroStrategy. There will be people potentially front running an S&P 500 inclusion, and it'll be one of the hottest topics of 2025. I can almost guarantee it.
Oh man, I'm looking forward to it. I'm looking forward to the complete breakdown of all the TradFi bros of why
Yeah.
this will destroy the entire market. The entire America as we know it will come to an end if MicroStrategy gets into the S&P 500. Like just
Yeah.
absolute complete radicalism. Meanwhile, you have MicroStrategy outperforming Nvidia in the middle of an AI tech boom. Like
Yeah.
literally, like AI from the movies is coming, and the company who's leading that and selling the shovels to make it happen is not performing better
Yeah.
than MicroStrategy. But
Right.
we're the danger. Unbelievable. It's super exciting though that we're able to be part of what Saylor is doing in a public company uh, setup, because it reminds me of what Soros did to the Bank of England. But he was the profiteer from that. There was no way for us to participate, or for the people at that time to see what was happening and then participate. And I think what MicroStrategy is doing is really allowing the common man who might feel the way that we feel about what's going on with money, and how we don't even really have a money, we just have currency. And now Bitcoin's coming back on the scene as money. Perhaps it's the first discovery of actual real money because of its absolute digital scarcity. So there's this special time in history, and we get to be a part of. The other day, I made the mistake of calling it a speculative attack. I don't like that framing of what's going on here, because we're playing defense. We're not on attack. The attack is coming in the form of government deficits. It's the government deficits and the outrageous overspending to the tune of $36 trillion worth of debt, another $220 trillion of unfunded liabilities, um, that we have to protect ourselves from. And then Saylor gives a way for the common man to get protection by focusing on more Bitcoin per share versus anything else. So it's one of those magic moments. And I appreciate you laying out the facts for everybody, and it's exciting to hear you say that FASB could be adopted in the first quarter, because once they do, like you said, every $1,000 is like hundreds of millions of dollars of profit for a $1,000 move in Bitcoin.
Yeah. It's an interesting. I mean, the stock has been so fun to pay attention to for the last 2 years because the narrative is really important. And so a lot of the narrative in 2024 has been around this net asset value, and there's been a lot of speculation and trading around net asset value. For those that aren't aware, the net asset value being MicroStrategy's market cap size relative to its underlying Bitcoin holdings. So let's just say MicroStrategy's Bitcoin holdings are $40 billion and its market cap is $80 billion. You would say it's got a net asset value of two times. So there's been a lot of speculation around this number because it's swung significantly. Like we've seen it go up to 4 and then back down to like 1.7. And there's some volatility in what this net asset value is. Now, where this gets really exciting is, if earnings flip positive, you're now going to start to see speculation on pricing the stock potentially on PE ratio relative to other companies. And when you start to compare, PE ratios of, some of the top 10 tech companies, you've got actually the average PE ratio of the QQQ, which MicroStrategy's included in, is like 33. So if MicroStrategy puts a $10 earnings per share up in Q1 2025, you would think that it trades, significantly higher than what it's trading at today. So um, yeah, it's incredibly exciting. It's an incredibly exciting time, and I think that it's going to get more chaotic because there's going to be more fighting and people are going to disagree on valuation, which is going to cause more volatility and higher peaks and troughs on MicroStrategy in the future.
Yeah. Yeah, absolutely agree. But it is amazing to see it all happening like in real life, in real time. It's like, whoa, I sometimes I'm confused by other people. Like there's so many zombie companies. I mean, I've talked recently about how potentially we're even a zombie economy, right? A zombie company doesn't create enough revenue to make profit. They can barely service their debt. We don't make enough tax revenue to service our debt. We need to soft default and
Yeah.
inflate. So like we're like a zombie economy. And I think the future is going to be built around Bitcoin equity as the most pristine form of collateral in the world. And I have a great tweet here from you. We have, of course, the old gold bugs here talking about Michael Saylor saying, never sell your Bitcoin. So obviously, Michael knows something here, right? I mean, he has the best performing company in the world. He's figured something out. It's based on Bitcoin as engineered money, something that's been strategically designed as savings technology, right? Leveraging the laws of economics and price discovery to empower its holders. This is amazing. And we have this gold bug who had to probably live through the demonetization of gold. And then over the course of the last 50 years has been hoping for the remonetization of gold. But of course, we're now getting the adoption and monetization of Bitcoin. And this guy is saying, this is getting hilarious. What's the point of medium of exchange or store of value, or if it's never sold, Michael? And I loved your response there. It's like you're telling here's a gold analyst with more followers than you and me, and he doesn't even understand the concept of collateral. I mean, this is just unbelievable. So let's talk about Bitcoin as pristine collateral. Let's talk about SAB and banks being able to finally custody Bitcoin. Where do you see this going for in the short, medium, and long run?
Wow. Yeah. I mean, this is there's a lot going on here in the near future with collateral. So, when I think of Bitcoin as collateral and how this market potentially evolves, and CJ, I think you said it really well. People shouldn't be thinking about how you lend your Bitcoin. You should be thinking about how you borrow against your Bitcoin, similar to how many people borrow against houses, right? Like when you go to buy a house or you get a loan on a house, your house that you own is technically collateral for the loan that you're getting from the banks, right? So if you didn't pay your mortgage, the person that lent you the dollars would take your house because that's the collateral used in that transaction. And now you can start to rethink and reframe the entire world where you've got Bitcoin as part of that equation. So we may see a future where you've got maybe houses and Bitcoin are the collateral on your loan that you borrow, right? So I think the goal being figure out how to borrow dollars to borrow dollars against your assets in order to finance your future. This is a structure that's often deemed or like I guess called buy, borrow, die, and many of the wealthy have figured this out and they've been running this strategy forever in perpetuity. So the idea being, you buy assets, you borrow against your assets, and then you die. And the concept being instead of selling your assets, you're and incurring a capital gain and paying taxes on those capital gains and those assets, you're able to borrow at a much lower rate relative to your capital gains rate. So let's just say you're uber wealthy and your capital gains rate is 20%. You may be able to borrow against your assets at 8. So you're saving a 12% delta there if you have income going in going in perpetuity, or if the value of your assets rises, you can sell off pieces to pay off the interest. And that interest is also deductible against your income. So this is a general strategy that is being built with Bitcoin infrastructure, and I think we'll see continue evolving into the future.
That
And
sounds like a good idea.
yeah,
Somebody should build that.
I wonder who's doing that.
No, but one thing that caught my attention there is the buy, borrow, die, and I think that really resonates with people when you can add something to your balance sheet, borrow from it, and then really because of the compounding annual growth rate of that asset, or because of the cash flow of that asset, you can carry that debt in perpetuity and pass those assets on to your family. And Bitcoin, I think, levels the playing field because this, it was real estate. Real estate, people don't understand. Like some people ask me, like, CJ, how can you sit here and say Bitcoin's going to go to $1 million? Like, it's not looking that good. Like, I got some text last night, like, hey, how you feeling about $91,000 Bitcoin? Like, I inverted the colors on my chart. I see green lines, so I feel pretty good. You buy some?
Smash buy, smash
Yeah,
buy.
exactly. So, but that's what real estate became, especially in 71. It became it is besides US Treasuries, it's the most important form of collateral within the entire system. And then behind that, believe it or not, which a big form of collateral is actually automobiles. Most automobiles
Ours, yeah.
are collateralized. So
Yep.
these assets are what securitize the actual debt and lower the risk. But in real estate, we're seeing that a better asset has emerged, a more pristine collateral that doesn't just grow in value relative to the dilution of dollars, because that's really what real estate does. It doesn't grow. In some zip codes, you're going to grow more because of the demand, right? Like over the last few years, Florida had a lot of demand because the politicians had a lot more common sense than some of the other politicians in the rest of the country. So we saw an influx of people who wanted to live here. And that influx of demand created price increases in the marketplace that were greater than the national average. So yeah, supply demand always plays its role. But what I'm really pushing at here is that the most important form of collateral, I believe, is already Bitcoin because of what I talk about. My listeners know you get the best of the treasuries, the best of gold. It's that hybridized, pristine collateral that really lowers the risk for lenders tremendously. And like you said, when you can hybridize that risk and plug it into, now you have real estate and you have Bitcoin. Now you have all these options on the table. And one product that we're working at People's Reserve, and I'd love to get your opinion on this and thoughts actually on what businesses can do to kind of bootstrap themselves, because they're not going to catch Sailor. There's no way they're catching Sailor.
Yeah.
He has first mover advantage.
Mhm.
But we created a home equity Bitcoin line of credit that allows you to transform your home equity into Bitcoin equity. Because maybe you already bought a home, you've been making your mortgage payment for 10 or 15 years. Your house has gone up in value quite a bit, but trapped equity. And you don't want it to compound at 8% or the rate of inflation. You want it to compound at the best performing asset rate in the world, which is Bitcoin. And you want to transform that equity. But I wonder, do you see a connection and opportunity there for businesses to kind of bootstrap themselves by transforming business equity into Bitcoin equity and try to catch up to what Sailor has been doing?
Yeah. Hmm. That's an interesting thought. Can you give me some more framework on the design of the
Yeah, sure. So let's go from the business. Let's go from the business side of things. Like,
yeah.
I guess most businesses would borrow against their assets and their cash flow. Those are
Yeah,
going to be
yeah.
the two most important things that a lender looks at.
Mhm.
So, I think
Yep.
what's going to be what Michael is actually forcing these other companies to do is to realize they're so far behind the eight ball that they can't just start taking revenues and then turning some of that revenue into savings and then start slowly accumulating Bitcoin. Like, you're so far behind the 8 ball, you actually have to take your cash flow, take your assets, take whatever equity you have on
Oh
your
yeah, yeah,
balance sheet and transform it into Bitcoin equity, or you're going to get left behind, especially with SAB being rescinded and a global worldwide adoption of Bitcoin and the monetization of Bitcoin through the offering of financialized products, just like the financialized products were built up around real estate. They're now going to be built up around Bitcoin, and there'll be hybrids of all of that between real estate and Bitcoin, business balance sheets and Bitcoin. And what can these companies do to catch up to what Michael has laid out for us?
yeah. I think you're 100% right, and I mean the world is going to look different 4 years from now, than it does today, particularly with SAB 122. And I mean, if you think about any business in the entire world, like any business is a treasury company, right? Like you're like, what's the goal of running a business? It's like to make some money and hold on to that money for the long run or the long horizon, plus making enough money to live. And so you think MicroStrategy's just really reframed this on a large scale capital basis, being a Bitcoin treasury company. And I think we are going to see a future that transforms materially, even for small businesses, where they have access to these types of um, assets in the traditional financial banking infrastructure. So you think about the repeal of SAB 121 and moving forward to SAB 122, where you've got banks with the ability to um, custody Bitcoin. You're going to see people that have held Bitcoin for a really long time are going to potentially start new businesses and new ventures to do things that they want to do. So they're going to go to some sort of banking team or banking infrastructure, and maybe they'll collateralize their Bitcoin there and generate a small business loan to go start running whatever business that they may want to do. Or you see, um, existing companies that already have like a small treasury may start to buy Bitcoin and add Bitcoin to their balance sheet and borrow against that to facilitate growth of their business and continue operating moving forward. And it'll all be you'll be able to do it with a single banker, right? Like with one company like JP Morgan, you could just have like all of your stuff at the same place. Um,
Do you think there's an opportunity for MicroStrategy to capture the market? Because a lot of Bitcoin maxis, like, I think we have the opportunity. There's very few things in the world we have the opportunity to educate on from square zero,
mhm.
right? But Bitcoin's one of those things where you have to take the red pill and wake up from the matrix and completely unplug. But when you
Yeah,
completely unplug, we actually get to teach you something. Whereas anything else, you're talking about, 18 years of indoctrination and
it's
ways of
almost
thinking about.
genetic, right? Like your existing framework of money and infrastructure of how you think about the world is like almost genetic at this point. And I think that's like the goal of the Fed is to, what you
Right.
know about money is like what your parents knew about money and your grandparents knew about money, because that was just taught to you and it's not taught in schools. So, like you have no,
The truth is what we say it is.
yeah, and that's just kind of like
But
what it's
MicroStrategy has this opportunity, especially with Saylor as a thought leader in the industry, to re-educate. Do you think, personally, that this is something that MicroStrategy is looking at in the future moving forward? It's hard enough to just uh, teach your employees why to care and what's important, but at a wider scale, perhaps MicroStrategy becomes that Bitcoin bank, not because of how many Bitcoin it holds, but because of its reputation and Michael's ability to mobilize people who believe in Bitcoin and understand Bitcoin and want MicroStrategy as their counterparty risk versus a big bank, right? Because if I give my Bitcoin to a big bank, there's a few problems, and this is my first question. And I have a bad habit of asking long questions and multiple questions at the same time, so forgive me.
I've got a pen and paper, so we're good. Yeah.
But so my first thing is, okay, do you see a problem with Bitcoin and fractional reserve banking and rehypothecation? And then my second thing is, for Bitcoiners, like, to me, I look at MicroStrategy, I see the biggest opportunity for MicroStrategy is to become this Bitcoin bank, not because they have the Bitcoin, because you don't lend out your Bitcoin, right? It goes exactly what you say. You find ways to borrow against your Bitcoin. However, if something goes wrong, then they have the Bitcoin there. to back their balance sheet. If something goes wrong at these other big banks, they have to go crawling back to the government, begging for a bank term funding program so that they can give you back dilutionary, inflated dollars with no purchasing power. So am I going to, even though they can custody my Bitcoin and I've been banking with them for 20 years, do you think MicroStrategy should concentrate their efforts on taking advantage of this awakening moment and this potential to be able to re-educate people from square zero to create a non-fractional reserve institution that allows to provide these products and services to the community and capture a lot of the market that the banks would keep if no other competitor popped up with the right narratives and the right leader to kind of mobilize everybody and upgrade our system? And
Yeah.
I'm sorry for the long question. I apologize.
Whoa. Let's okay, so there's a oh man, there's so many things there. This is a fun conversation. So um fractional reserve banking and rehypothecation. Let's start there. Do I think that's potentially a bad thing? I do think that's potentially a bad thing. However, Bitcoin is incredibly transparent, right? And you can see when Bitcoin moves and who holds it and where it goes and how much the companies hold, et cetera, et cetera. So I think there's I've been trying to work my way through this, and I think there's significant opportunity here in the marketplace for a potential rating agency, a decentralized rating agency or audit type of system for any company that may offer um, these types of facilities to borrow against your Bitcoin or do these types of things. And what I'm thinking here with this in mind is that you have a third party company or a decentralized organization or audit type of system that will go look at companies that are custodying Bitcoin, like JP Morgan or Morgan Stanley, and kind of establish some sort of framework such that these large institutions need to fit within if they're going to provide lending products on their Bitcoin, and the market can demand uh, to start to use these institutions that have a better rating than other companies. So, for example, let's just say you have um, a rating agency that's or a grade rating system where you've got like, okay, this bank is an A rated bank. They are not rehypothecating their Bitcoin. They're within certain technical thresholds of how much they've got lent out relative to the assets that they've got on their balance sheet. We can see it because we see all of this on-chain Bitcoin here, so they get an A rating. That company may charge a higher rate in order to bank with them or go through that process. However, they've earned it by providing significantly better security, and we can start to see a potential framework that the market demands to work with these types of institutions. I think that's a possible future. Alternatively, you think about these companies, banks that are custodying this Bitcoin, and they are rehypothecating it, and they're lending against it. They're lending in their entire balance sheet. As you see more capital come into the Bitcoin network and the Bitcoin ecosystem, the Bitcoin held on balance sheet is going to get larger and larger and larger, and the ability for banks to continue lending against that is effectively going to, in my opinion, I think that's the time when Bitcoin starts to consume the traditional financial fiat system from the inside out without you know even doing anything differently. It's almost like this infection that just starts to you know work its way throughout the traditional financial ecosystem via different routes. So I'm gonna start there. Well, I mean, what do you think? What's your thoughts
Yeah,
and
I
opinions?
thought you explained that perfectly. Something that stuck out to me when you were speaking was, and this goes back to a tweet you sent out recently, which is really good, talking about the strike offering and trying to figure out free market pricing. Right, so few people understand how things are actually priced and how much work and communication goes into discovering price.
Hmm.
And what stood out to me was we vote with our money. So you said the marketplace can demand, and that is the essence of the opportunity. We need to vote with our Bitcoin purchasing power to explain to these companies, because it's the only language they understand is money, to explain to them, look, these practices are not acceptable. These practices are something that we're not going to deal with. If this big bank A wants to allow me to borrow against my pristine collateral, but at the same time turns around and rehypothecates that collateral, and then I have to deal with the risk of there being multiple claims on my pristine collateral based on their judgment with the history of their past performances, that creates a lot of concern. But ultimately it comes down to us. It's not, we can't just sit here and wait for them to tell us that they're going to empower us. We need to tell them, look, we're not going to deposit our Bitcoin with you until you offer multi-signature, until you work with an auditing firm, or until they have a ratings agency, which I think is a fantastic idea, because there is no, right now we have a commodity credit market in Bitcoin. It's over collateralized lending. Is there ever going to get a point to where, because of how can we use Bitcoin and its 60% CAGR to have an under collateralized, but at the right metrics, at the right push and pull system, so that over the life of the loan, yes, you're making your interest payments, but principal's covered at maturation. So we are literally, it's such an exciting time because we're starting from square zero, and we can come up with any product that we can think of, and we have the chance to re-educate people because they're finally waking up. So that leads me to another question I have, kind of breaking up my other questions. I'm sorry, I'm going completely
That's all
off
right. That's
here.
all right.
It just came to mind when you were talking, which
Yeah.
is interest rates on Bitcoin. So what do you think about the current interest rates on Bitcoin, and where do you think they're going in the future?
I mean,
Because I have
what are
heard
the
on like a
current
Bitcoin
interest
standard that
rates?
the rate of the interest on Bitcoin, because people get confused about this price discovery, right? Interest rates are the price of money. So what's the interest rate? What's the price of Bitcoin money? Okay. On a Bitcoin standard, it would be Bitcoin CAGR plus a premium, plus a risk premium, right? So you might have to
Yeah.
borrow against your Bitcoin at 60 something
60.
percent.
Yeah.
But then when you combine currency, when you borrow currency, dilutive debt derivatives against your pristine collateral, accretive asset, now you get this beautiful synergy where I think what you said, that's what thought in my head without doing anything. Why? Because it's just behaving naturally. It's just doing what was engineered to do, which is to compound value over time. And now how do we use that to materialize products that empower both lender and borrower? So I guess I'm ranting now, but the long-term interest rates on Bitcoin with this money currency relationship, where do you see them going? Is it prime minus? Is it,
Mhm.
what do you think?
Man, I need to sit on that one for a while. Yeah, that's an interesting question.
Fair. That's fair. We can save
Like
that for
negative?
episode 3.
Yeah, maybe that's episode 3. I've gotta let that one bounce around for a while.
Negative. That's the magic. See, that's the magic
Is
word
it
I was
negative?
looking for.
Is it negative?
We'll revisit this
It
on
should be.
episode 3.
It
Right.
it should
Yeah.
be. It should be negative.
It should, and
Yeah,
it's
that's
an
weird.
interesting concept because Donald Trump actually has called for negative rates before.
Yeah.
So if we see Bitcoin integration not only into a strategic Bitcoin reserve, but a Bitcoin recapitalization fund, and we
Oh,
have
yeah.
Donald talking about no income taxes and tariffs. We have Elon Musk recently came out, said property taxes make your home like a lease to the government, so you don't actually
Yeah.
have true ownership, which is very common sense. We all agree with it. But all these, it's not that far fetched to think that these people would come out and say, "Hey,
We'll
negative
give you
interest rates."
we'll give you 5% to hold your Bitcoin.
Yeah,
I mean,
yeah.
that makes sense because, oh, shit. I made that realization and the hair on my neck stood up.
Right. What
It's
does
like,
that mean for the 400 something thousand
oh
sitting in
god.
MicroStrategy
Yeah.
that we own per share?
Wow.
Unbelievable.
Yeah, that's a I'm gonna let that one bounce around for a while.
We'll
Okay.
save that one for episode 3.
These are fun topics for my newly unemployed self. Yeah, this is great.
Very good. Well, okay, so we'll move past that one.
Okay.
And the next thing I wanted to get into is when we talk about Bitcoin.
Should we talk about Bitcoin Bank, MicroStrategy Bitcoin Bank?
Yes,
Okay.
let's hop into that.
Okay. So that was part
Part two.
2A of your of your prior question. So MicroStrategy potentially being a Bitcoin bank. I think that's eventually inevitable because and it may not look anything like an existing bank that we have today, and it might just be completely different. I do think there is some education component that's going to happen over the next decade, and we kind of got to zoom out and think about like long time horizons here, because right now, as Saylor has presented this, which I think is a great way to explain this, we're in this kind of like Bitcoin gold rush, right? So but between now and 2032, um, is really the Bitcoin gold rush. At 2032, there will be 1% of Bitcoin that is, remains to be mined over the next 100 years. So basically, there's effectively very little Bitcoin that's hitting the market at that point in the future. So, I think the strategy from now until 2032 is to accumulate and acquire as much Bitcoin as humanly possible, via tapping these different capital pools that are the most efficient. So for Saylor, the easiest access to capital at the moment is this convertible debt market and the preferred stock market, and using the ATM, raising capital off of existing shares. Now there will become a point where the scale isn't necessarily there. So right when we're talking about, um, you know this, so they just came out with this $42 billion capital plan. When we're talking about a $200 billion capital plan 4 years from now, that capital plan may involve different pools of capital to acquire fiat dollars to buy more Bitcoin into perpetuity, and that might be, in this lending framework, as you have outlined, potentially like business loans or even car loans, or a potential insurance or reinsurance framework where you're utilizing the capital and collateral, and taking advantage of potential float, to having these assets for future liabilities, and some sort of framework, uh, to facilitate that financial structure. So I think it's relatively inevitable. Another concept that I've thought about is, over the past, is MicroStrategy also potentially facilitating liquidity in markets, uh, potentially surrounding, dark pools. Like if we're thinking about a world in 2028, where you've got a country like, I don't know, Germany, where you got a country like Germany and they want to buy 15,000 Bitcoin, but Germany, there's not 15,000 Bitcoin for sale at the moment. So how does a country like Germany buy 15,000 Bitcoin, while making the least amount of impact on the market? And I could see, um, holders that have a ton of Bitcoin facilitating liquidity in dark pools for these types of large scale transactions that may go on, within the next, 4 to 8 years, when there's not that much Bitcoin available on uh, on the market.
See,
So
now you saying that just made the hairs on my neck stand up,
yeah,
because that is something that has been my personal experience in decentralized finance. So yes, I'm a Bitcoin maxi because Bitcoin is money and nothing else can compete with Bitcoin. And anything trying to compete with Bitcoin is an absolute scam. But there are systems, both centralized and decentralized, built up around Bitcoin that help it evolve from the digital gold to the
right,
pristine collateral. And even MicroStrategy coming up and spinning up a decentralized protocol owned liquidity pool that only they can contribute to, both on both sides of liquidity. And then all of a sudden, and by the way, they can set it up and they can position themselves in their market making fund to be delta neutral, which
yeah,
means that it doesn't matter which way the price of Bitcoin goes up. The value of their position, the value of their treasury is not going to change. It's going to have the same amount exact of Bitcoin that it's going to have, except now it's creating cash flow. It's
right.
generating fees through the volume that's swapping through their dark liquidity pool. These are the type of things that I think are going to be effing insane when it comes to what's going to happen, because people don't realize this, but one of the best things you can do, people are like, oh, you know what's so fun? Let me lend my money to the government so I can get 4.5%. I got a better idea. Buy some USDT, buy some USDC, provide that liquidity in the decentralized internet economy where rates aren't stated, but are based on the free market supply and demand of loans, plus the perception of counterparty risk. And boom, all of a sudden you're generating cash flows. And I'm telling you right now, it's much higher with the volumes that we're seeing. It's much higher than the 4.5% you're going to get by lending your money to the government. So when you said that, it really sparked me up, because the People's Reserve business model is based on the combination of decentralized finance, things that evolve Bitcoin. Forget about the shit coins, forget about the meme coins and the art. That is all garbage. Don't go anywhere
Right.
near it. Don't waste your brain energy on it. But transforming Bitcoin into pristine collateral and facilitating these decentralized marketplaces that open up the doors internationally when there's a lack, when there will be a lack of supply, and people looking to establish large positions without creating huge amounts of slippage, right? Don't be a Germany, right? Don't market sell and smash sell your Bitcoin. It's like it's not amateur hour. So we are moving into more sophisticated products and services and more sophisticated infrastructure that is going to facilitate the marketplace. So when you said that, I'm like, wow. And if MicroStrategy can get someone like you in there and just kind of listen to the community on how this should really be done for the people, because there's no doubt Michael knows traditional finance, right? He's probably forgotten more about that than both of us know, and combined raise the 10th power.
Right.
But has he really messed around with smart contracts and decentralized liquidity pools? We don't know that, but it's worth, if he's able and willing to create these amazing products that solve different pool of capital problems, then this is just another product to solve another problem. And it's on the international scale instead of the pools of capital that are currently looking. So, man, right. I'm still jittery about it because it was just so well said. And there's no doubt in my mind, like that's the future for where this is going. So,
yeah, it's big capital. Like, where are the changes in the financial ecosystem going to happen? It's not XRP making its way into the. It's large institutional financial capital adopting digital capital. Like, that's going to change the market, and the financial infrastructure that's built around it, and where you have these kind of hybrid systems of the traditional financial system, bridging the gap by also utilizing this different form of collateral to transform large pools of capital into different types of products in the future. So that's where I'm like, I think I can make a really big splash, is like this kind of large institutional digital capital infrastructure.
Yeah. Oh my goodness. There's no doubt in my mind. I mean, I hope we're going to be able to retire you from personal balance sheet accounting and bring you over here to People's Reserve, because we are just there. It's so right there. But I wouldn't blame you for going to MicroStrategy. It's can't blame you there. But look, it is absolutely amazing to sit down and get your thoughts, and promise me over the next coming months you'll let that interest rate question fester.
It'll percolate, yeah, for sure.
Beautiful. And on episode 3, we'll dive in for everybody to get Jeff's thoughts on the future of finance, which is clearly being built around Bitcoin as pristine collateral. Jeff, thank you so much for joining me. I want to leave you with the last word to the audience.
Yeah, absolutely. I think we're going higher. Right. We've got Bitcoin is at a $2 trillion asset here today. So I think it's the 7th largest asset on the planet. MicroStrategy is trading around, I want to say it's around a $90 billion market cap. So it's around 110th, 120th publicly traded company in the world. I truly believe that Bitcoin is going to go to the top of the leaderboard of largest assets on the planet, potentially surpassing gold. And with MicroStrategy holding significantly more Bitcoin than any other company by an order of magnitude, I think that's incredibly exciting and incredibly bullish for the future of decentralized finance, the future of Bitcoin and digital capital. And I'm excited to work on it in the future. So appreciate everybody for listening. Thanks for following along. You can see on the little tagline on the bottom, that's my Twitter handle. I do run this podcast on Wednesdays called MSTR True North, group of people that get together and talk about, the cutting edge of what's going on in the MicroStrategy trade, the narrative that we hear in the market, and talking about where it could potentially go in the future. So appreciate the time.
If you're not following Jeff, you're a fool. It's amazing alpha. Thank you, Jeff, for all that you do, and I look forward to next time.
Absolutely. Thank you. See ya.